Welcome, crypto people. How are you doing? Yes, good to be with you again. And we're going to throw to you the big key that is going to see crypto be saved. A little bit of a listing Bitcoin just above the 30K. What's going to be saving Bitcoin for further price rises? Might ease a little bit first before that comes. And why dominance is likely to slip and certain alts are going to start playing a little bit of a catch-up plays. Which ones are those? All of that and more in the video now coming straight at you. Hit the like, hit the subscribe to acknowledge this gifts that we dare bring. Okay, Dixie is your chart, dollar index. We've explained many times before in videos why this is actually one of the most critical charts for everyone to understand. What is bad for dollar is good for the anti-fiats, God market of anti-fiats gold, but also an anti-fiat crypto, God market of the crypto markets, Bitcoin. And then in a similar way, the alts being silver to the as gold is to silver, so the alts are to Bitcoin. Stumbled around that one, didn't I? Anyway, so this is the big key thing. The people that are long dollar are going to get iced. So we're going to show you why we say that. So what happened last week? If you joined us for a live trading day last week, you would have recognized that actually as the non-farm, I want to say fake number came out. Well, it's been pretty fake in my opinion for the last 14 months. But actually, this one that came out just this Friday gone, this is being recorded on a Monday as we talk to you. That particular payrolls number was actually under expectations for the first time in 14 months. So the 15th was a miss. 14 in a row for Bidenomics. Yes. And what actually happened is not much at first, a little bit of an easing on the dollar. And then we went and did the crypto session. We were talking about the crypto markets. And in the second half, while we were dealing with the crypto session, we spotted the dollar absolutely throwing it down. And here's why that should be a concern for Americans who are exposed to the dollar particularly, but what the opportunities are in that. The people in the energy complex are going to get a little bit of a bid. The precious metals are going to get a tiny bit supported in dollar terms. But in actual fact, it's not that precious metals are super strong. It's actually not that Bitcoin's that strong at the moment. But the dollar weakness is going to put a tailwind to keep up Bitcoin roughly where it is. Might sell off a little bit, gain reback, but the alts are going to get a bit of a bid, and a lot of other things are going to be kept afloat by a weakening dollar, which could include equities, other things as well. So let's get into it. Why do we say the dollar is going to be the big part of the story and it's going to be getting weak? Well, I'll go with my fat cookie draw and I will show you that here we are. This was a seminal event. Now, payrolls days are very interesting. There's a reason why we do our live trading day on a non-farm payrolls day, to make them stick and pop. Because when things take a new direction, it's often in off a major fundamental piece of data. And what's actually happened is you missed a number. And more importantly, the Fed stopped raising rates. And everybody assumed, oh, pivot. Big mistake in my opinion. We will have even higher rates in time, but not yet. And as a result, this is deemed a very negative thing for the dollar currencies. So let's have a look at this. This is our squeezy Japanesey over here. This is a long grind. I want to drop down into this, but first I want to show you the key levels you have to appreciate on the big time frame. So if we just scribble for you, this blue line is the 100 level. That's right. One of the most important technical numbers, and we made it super fat for you so it properly pops. 100. And what typically happens when you break a key level, like 100 on the Dixie or 100 on oil, etc., is you pause before it and you wind up to properly smash it. Key levels of significance are smashed, typically. So you can sometimes feign and break them and then pause. So we could have dipped and just done a technical breach that gets rejected. So that could have gone down there and still been a typical key point of price behavior. But when you are taking them for keeps, for a sustained period, they are broken with momentum. What does the structure and target actually give us? Well, believe it or not, this is our target level down here, and it's around 97. So the headline for this video is a crashing Dixie. A crashing Dixie now at around 101, 102s to 97 is actually a very big call, because that's going to have repercussions for the Euro USD. It's going to have repercussions for the USD Chinese yuan, a lot of other FX based trades. Dollar weakness is coming down. Now actually crypto hasn't been that great, but in lieu of the weakness of the dollar, Bitcoin on the whole, when this event has taken where Bitcoin is today and where it will be when the dollar runs 97, will be higher. And in actual fact, as it gets disorderly, Bitcoin could suddenly have a strong move. For now, the crypto market hasn't moved much. In fact, Bitcoin is looking a little sick. We'll pop onto it. Had a kind of rally, and then it gave it all back. We're going to be pointing out that dominance is going down too. But I really want to finish properly on the key driver that is going to be the macroeconomic story that you'll be reading about in 3 days, 3 weeks, 3 months. Dollar weakness, real dollar weakness. So I'm going to first stay on this time frame and just zoom this in a wee bit and pull you into it. So you will note in this up leg, kind of a rising wedge, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 candles to get to that high point where my red line starts. 15, back down to the lowest point at any point, a round tripper to the 102, actually sub now the 102 level, 101.9s, all the way up to 103.572. Took just 3 days. The insiders, as ever, with a little cheeky eye on what was going to come before you got to hear it, saw the reversal on Thursday. The actual trading day and the non-farm payrolls number came there. And initially, not too much happened, and then you fell from well above 103 to well sub 102.5, finishing just above the 102.3s there. And now, today, Monday, continuation of what's potentially an inflection point for the dollar. Now, at one point, I was looking at this and thinking the dollar was going to get stronger. That wasn't going to be very good for us on crypto side. But in actual fact, this move, such momentum, coming off such a key financial event day and potentially about to break that low, says to me, dollar down. So, the little FX traders that have snuck onto our crypto channel here will learn that we're bearish the dollar right now. And the 97 run is a long, long way off. So in 3 days, you round tripped and took back what took 15 days to get you up in this environment. Okay, so with that said, let's go over to our crypto markets and have a little bit look further. Oh, hold on, wait, before we do that. This is against the Dixie. This is Euro, Swiss franc, British pound. British pound, Euro, hardly stalwarts of prudent financial money systems. So what happens if we actually take the dollar and we look at it across other pairs? Well, here's what's happening against yours truly, the Euro, the largest one. I'm going to pull this through and I'm going to give you a bit more space to see. We called this looking very toppy and the pullback that was here. This is a squeezing higher wedge. Also, in our live trading day event of Friday, we actually said the dollar is going to weaken against the euro. We saw this falling wedge. We highlighted to all those who attended, buying wicks, and then no more lows and buying wicks. A falling wedge it was, major break there, and up you go. Look at that. You've gone from, let's just say sub the 109s, you're at about a 108.8, and where are you now? North of 110, 108.8. Now in trading parlances, making 50 pips a day is a phenomenal performance. Well, what you've actually done here is you've gone in from 108.8 right the way through north of 110. And you've got 7 pips above 110. So that's quite significant in terms of the number of days we've had since the live trading day, which was on Friday, 1 day ago. So you would have had since the non-farm after the payroll number, and you would have had a weekend, and you would have had what you've had of Monday today. And in that time, you've done rather well on the upside. And we are saying to you, further upside in what is a bit of a rising wedge structure where you can squeeze higher for a bit over there, bomb, bosh, and along the bottom lows here, looking pretty sexy for the euro, which is unusual, you might say. Well, ironically, as I've often said before, a little bit of euro strength, not bad. Why? De-dollarization, the options of alternatives does not see the Western nations charge into the won and the ruble, I'm afraid. Nor the South African rand, I hasten to add, or the Indian rupee for that matter. In actual fact, they chase liquidity. The wealth, before it's been transferred, that's the gold moving from west to east, the wealth will follow the liquidity. And that means people are locating their treasury into, you guessed it, the euro, because that is the most lucrative and liquid cross pair that's in there. But there's other currencies which will do rather well, because the euros, as I've already mentioned, hardly a stalwart of sound money. Let's just leave that one there. So let's have a look at the Chinese one, by the way. And I've done a good chart here for you with quite a lot of annotations. By the way, you can get all of these earlier, faster, sooner inside our premium community. Hit that link in the description below, the very, very first one, and book a call to chat about how you can get this intel earlier before its free view on YouTube. Okay, so a bit of history on the USD CNH. We've done a couple of draws here for you to show you, and in fact it's got a fair amount of head and shoulder history. Nice little squeezy Japanesey, you broke there, up and away, first in a new trend, good little target take, you went a little bit higher and blow off over performance. Marvelous. Head and shoulders on the US dollar. This is dollar versus China. This was the period of dollar dominance that we called for, 100 and was it 111, 110, 80, whatever's, 111 plus or 114s on Dixie. I can't quite recall the targets anymore. I'll have to check that number. That was all part of dollar dominance period. It was also a terrible bear market for Bitcoin. So you here for the crypto. We're going to be getting to cryptos. I've got cryptos to show you, but I want you to understand that the dollar weakness, I haven't just made that conclusion off of the Dixie chart. 360-degree analysis says I am watching my left, my right, my above, my behind, and my below. Oh, I like that view best. Untouchables. Okay, so let's go into this and have a look at this red head and shoulders. There was what we call armpits and a break there, a little bit of a dip. These light blue lines are our necklines. That was the target that was generated and an on-target performance. That was a huge culling of the dollar. Dollar got properly weak. It sold off from 7.4s right the way down to 6.72 for such a huge pair, not in terms of currency trading, but on trade, actual trade of physical goods. Big buyer, big seller, and you know who's the buyer and you know who's the seller. Also, we made on the way down, highlighted in the green, we started throwing down the structures of, you guessed it, another head and shoulder, only the beginning of a reversal head and shoulder, hence why it's in green. Left shoulder, head, there she goes. Beautiful rounded bottom. There we go again, talking about rounded bottoms. There, go. So that was your green reversal head and shoulder. There was, of course, earlier a little bit of a double bottom that made a target on the way up. We do a lot of micro analysis on the lower time frames. You can see it in here. I'm not going to draw it for want of a better reason. It's going to get a bit messy. So this had its own neckline around the 6.985. Both these necklines were in and around a very key, interesting level. The downside ones was up there. That's with this head and shoulder, and the upside one is around here, and you can see they're either side of the big 7. The big 7. 7 is an interesting level. Now what happened is dollar was going up. Remember, base currency, dollar, $1. How many Chinese yuan do you buy? Well, you broke over here at around 6.985, uppity up. all the way up, 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 and made target by a whisker, a cat's whisker, to 7.28. What happens after you make targets? You will know, if you are watching this show regularly, that a target is there for a reason, because you will hit a level and then you will pause. You will pause and you will have no more easy progress. That means time expends and you give back, or you go sideways, or both. And what are we going to see if we drop into the lower time frames there? Let's go and do it. You ready to have a look at the lower time frame? So the question is, if the dollar is going to be weak, if we can be super strong on that point, we know that cryptos should get a bid. Cryptos and alternatives to the dollar should get a bid. So we drop down to the 4-hour time frame and we have a look in here where that target was made. And guess what? What do we see? Well, apart from the target being made up top there, we also see that there is a left shoulder, a head, and a right shoulder. And in actual fact, you had a wee bounce already off the 7.22. So the interactions with the 7.2 level are there for everyone to see. There's the shoulder, there's the head, and there's another shoulder. Boom, boom, bosh. And it means a downside break. But it's more than just the target implied by the downside break. You saw this pair. Big swings. Secular reversals. This is a tiny head and shoulder ish compared to the two I just showed you that were multi-day and very large and took a while in forming, but it can lead to a far more extended reversal to the downside for the dollar against the Chinese yuan. So down, 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 potentially more downside to occur. So that is the dollar against the Chinese yuan. You're going, geez, I'm getting a lot of FX for a crypto channel. The importance is to understand, what about the others in the mix that are there around? Well, we can show you the daily on the Hong Kong dollar, one that we've highlighted. At one point, when we get a blow-off in rates, we'll see the potential peg of the Hong Kong dollar. But which direction is it going now? In our opinion, actually, you're going to have a probable dip to the downside. A little bit of a shooting star in here. See that wick being reversed back down. Spiky up, spiky down. Guess what? A sell off for us. Especially bear in mind, this Hong Kong dollar is essentially going to be subsumed into the larger China complex, and you've already seen our take on the Chinese yuan. So our expectation is a downside move away from the peg high for the Hong Kong dollar right now. But hang on, you've just done, the Hong Kong dollar and the Chinese yuan, and you've just done the euro. I mean, give us some more. Those are, that's still not 360-degree analysis. Well, you can see it's looking weak against the Korean one while we're here. It's got a sell-off in it, but that's not really a major currency that many of you are thinking about all the time. What about the good old GBP USD, the old lady? And there you can see another rising wedge, much like the euros, with only one impulse in and a second and a third still to happen, which is likely to make a higher high. And many of you will be going, but rising wedges equals down. No, not necessarily. Not necessarily at all. What it means is a squeeze and then a possible melt up. Don't forget, we got a target for you on the inverted HVF around 97. That is 9, and then counts fingers. Got to be careful. Don't make a fool of yourself. 97. When you are currently 3 digits to the strong at 102. Quite a big fall. So this is going to squeeze higher for us in the short to medium term, and going into medium, fairly long medium. I wouldn't say long term, medium longish for a fall to 97. It won't be just the euro that benefits, but actually the pound will get a little bit of cash. Of course, the Swiss franc is a stronger currency. How is the USD looking worse versus the Swissy? Well, let's go find our Swissy chart and have a look. So when you go through all the FX pairs to actually see if your conclusion is holding, you actually find some pretty interesting charts. We do a lot of work on this one. And in fact, the franc is one of all the fiats right now, when you have to be in fiat, is the one I would most prefer to be holding. you've got a rising wedge and you're going to be threatening and running, in our opinion, that low. Previous rising wedges have performed as expected on the upside by dollar, with resounding break, return move, smash down, new wedge, smash down, new low to be run, looking weak, dollar against the franc. So hold on, it's weak against the Chinese currency, it's weak against both of them, the Hong Kong as well, it's weak against the British, it's weak against the euro, it's weak against the Swiss franc. This looks like a pretty seminal theme of weakness. Well, let's just show you some. What about some currencies that you typically don't associate with strength? The Mexican peso. So if we go and have a look at the Mexican peso, how's the dollar doing? Well, it's been doing terribly on the big time frame against the peso. You had a little attempt to go up, and it doesn't look like it's about to get strong on any level. We're on the weekly time frame. On the daily, it got a little bump spike and it gave it all back. It literally is round tripped, and the trend is clearly down. Do you chase bottoms? What about that currency that I slam all the time, the yen, that is doing yield curve control? Well, everybody's been gaining against the yen. Up, beautiful little move up. But hold on, what happened here? Waited for the non-farm payrolls, no more rates increase, and a miss on labor. Sorry, that's two very, very different pieces of data to fit into our models. No rate increase, bad labor, less room for further rate increases. Guess what? You ain't looking like the safe haven of fiat no more, and in fact, the most compromised currency by debt, by yield curve control, is actually getting revalued. And these are horrible candles. When you trade up, you can't hold, you get smashed back to where you came from and some. That is a real rejection candle. The dollar is weak, friends. The dollar is weak across the board. And I will show you another random currency, and then we'll move on to the crypto. USD NOK. So if we have a look at the Norwegian krone, this is an oil producing currency. So remember, oil has a little bit of anti-dollar in it. Oil price is actually creeping up. The energies as a whole will get a little bit of a bid. Everything will get a bid that's priced in dollars in an international market. There. Huge head and shoulders, round. Horrible last 2 days. Horrible last 2 days. Friday, the date of the number, and Monday, or is it actually Thursday and Friday? Let me get my facts straight. I don't want to mislead you. It seems it's already rolled into a new day. The 7th of July, the 10th of July. That's right, as I said, it Friday and Monday. So we're already starting the Tuesday candle. I'm recording it still Monday because I am far east, west I mean. So that is the neckline that's broken, and that's a target, 9.7. So now you've got a whole bunch of FX trades as crypto traders. So let's bring it back to crypto. Here we go. So thank you for your patience. You now have looked at multiple currencies and you have seen pattern-based structures, of which there will be others. You can go into more obscure ones if you want, but all of which highlight the fact that the dollar is about to be weak. So now we move over to our beloved Bitcoin and we have a little look at it. This is a hard-working chart, as you can see, but let's maybe take the eye off and introduce the details slowly. So with Bitcoin, marginally higher high, and since then, a little bit of an uneasy churn. And actually, this candle up and then quite a long way back down. In short, Bitcoin has been unimpressive. In fact, it's looking a bit soft and a tiny bit weak. However, Bitcoin dollar may hang on for a bit. In short, you could get a sell through these levels and create a broadening structure such as this that leads to future continuation. So you could trade a little lower against the dollar, but I'm not expecting it to be too cataclysmic because the dollar weakness is going to dominate, and after maybe making such a low, you will rally back up, you will pull back down, you'll churn, and eventually you will go up on the run of 97 to the downside as brought to you courtesy of the weak dollar against the dollar index. So that in itself could still see these lows run. Technical stop sitting there can in fact still be run. Remember, we put you long in here. We said this is the best moment and the most bullish pullback you could possibly hope for, as it kissed just below the 25 magic neckline. We gave you that entry and that entry just sub the 20 in this bull market so far. So if we warn you that you could ease a little bit, pay attention. However, the good news is the dominance is coming down, and some of the alts may take this opportunity to catch up a little bit. So if you're not all in Bitcoin, you could do reasonably well. We'll cover that in a minute. So Bitcoin, unspectacular, likely in the longer term to end up higher. So we are currently at 102. So let people understand exactly what we're saying. Right now with Dixie at 102 and the Bitcoin at 30,400, Bitcoin will be higher in time when Dixie hits 97, even with a pullback in between first. So longer run higher. However, you may have that dip a little bit when the dollar is just kind of softly weak or getting rallies. Bitcoin could soften. Let's have a look at that dominance chart and point out what we are seeing there. In fact, a better structure, we will take a look at the dominance, but a better structure might be to show you this very interesting chart. What is this chart, you're wondering? Well, let's just rescale it properly. This chart is Bitcoin lined up with total 3, excluding Bitcoin and excluding Ethereum. So number one alt out and the big boy gone. Okay, so what's happened? Well, as you can see, the Bitcoin dominance period has served Bitcoin very well during these days. Up until round about here. That was the 19th. So all the way through that, Bitcoin dominance was your play. It was your best play from that period, generally. Now, you even got a bit of a sell-off here into this low. So I would actually say Bitcoin held up better. This was, again, Bitcoin better. Because you came off a tiny bit, little bit of, very range trading, nothing to wet the bed about. However, what you might have noticed is subsequently, let's change color for this, subsequently the alt market, not yellow, we can't see yellow. The subsequent market movement has been more in favor there on the alts in a percentage term. Both came down a reasonable amount, possibly the alt a bit more. But there is certain alts that are doing better than the general total 3. Remember, total 3 also has a lot of micro caps, a lot of not so good tokens. Let's just leave it there. Medium sized going nowhere. So which tokens might actually be giving you a bullish feel with that dollar weakness behind them? Okay, let's go back to over here and introduce to our friends, our suffering friends, because I've mentioned Charles a little bit. Charles in South Africa was the guy behind Castle Lager Beer. They all used to go Charles. But in actual fact, this is Charles Hodgkinson I am talking about. Charles Hodge. So if we go over to ADA, which is of course Cardano, and we have a lot of people that are kind of fans of ADA, and he's an earnest chap. Now, one thing I did do, as I showed you last time, is that Cardano sold brutally on the SEC. It sold brutally on the SEC and it didn't grab much back in the initial instance. So when we compare it against other alts that were part and parcel of the naming and shaming as potential securities, some of them have rallied back somewhat. At least 50%, 60%, one or two are special insider token, not 60 times. We probably might even get 70 times out of it. You can find out which one that is. And no, it's not a micro cap or a medium cap. It's sub the 25. It's between 1 and 25. It's a strong cap token. You can find out. Hit that first link in the description below. But by the way, once you have the name, you still have to get it right. You still have to get your entries right. You still have to know your target. There's still work to be done, and you have to sit tight. And it isn't tomorrow that it happens. It isn't tomorrow the macro move, but it is showing relative strength already to quite a degree. So what we're actually interested in on ADA is this price behavior that it's throwing down right now. Now I want to warn, we could be wrong. On small time, the minute we start getting into the smaller time frames, our confidence level drops. So come back and puke and say you were wrong, or it never happened, or you're welcome. But the lower time frames don't always work out exactly as planned. There's of course a basing ascending grind line under the structure as well on the bigger time frame. And we are doing something dangerous. After a very harsh sell, we are calling for a new move direction. So that's a little bit like a reversal call. It's not exactly. We have an upside HVF. It does have a basing ascending grind line. I prefer to see it trade through. That's a little bit of a threat. Typically when you get a bagel, you want to down, or you just want to square up through it and trade through it and time out through it and then go. So that it's been respected. It normally needs a break of some form through it. And also this violence of the downside, typically you want to be careful that you are not staring at further continuation to the downside. However, there has been some success on a number of the smaller tokens that are in existence on the ADA larger ecosystem, as that popular word, ecosystem. The ADA ecosystem must show you the popular ecosystem. One such example brought by a community member who's a big ADA fan, by the way. We have quite a few of them. Highlighted Cherry, shout out to him. He knows who he is. And we warned him, this is an unfair advantage once you know HVF method on the smaller charts and the smaller tokens. He wanted to be participating in the ADA area, and he knows more about it than me and which ones are what, and he likes some of the fundamental stories. We said this will make a target for you. It has reasonably high probabilities. When he showed it to us, we suggested he could accumulate on the lower levels early in advance, because when he first presented the chart, it was round about here. At this point, he got that opportunity on that down leg. He loaded up in and around the 75s-ish, 76, 77s, I'm assuming, and he ran it up to the 110. Plus, what is he getting now? Well, I haven't checked. You can go see the update of Cherry on the ADA platform. Did this one give him what he wanted? Did he get another move up, or will he still to 125? Maybe we should have a look live. I don't even know the answer to that. So we'll have a look at that in due course. Let's have a see. Have I got it? Have I got it? Have I got it? Yes, he has. Live chart on Cherry. What will I see? Is it going to make a fool out of me? Who knows? Who knows? We will see soon. All the way back down. It made its target. It made its target. And that is the value of targets right there, my friends. Oh, it's beautiful. 125 from, you guessed it, way down here at 75. That's a good little run in these kind of market conditions. By the way, that's in ADA, which actually is the currency that I feel may go up. So there is some life in ADA, even though on a smaller time frame. This does not replace our bullishness for XRP. It does not exceed XRP or our 60X. It's something that's being offered right now on a much smaller time frame. So we feel that there's a chance, if I take it down to the 4 hour, that you may get an upside move in this structure. So here's something that's a little bit shorter time frame. A lot of what we do is macro. We like to come down from above on big time frames, highest confidence levels, and then slowly. And this certainly is a structure that is interesting to us and implies, give or take, 33.5 plus. And because it's the first after a recent low, some overperformance might be possible. And we have a method for holding on part of the stake with overperformance, and that can be learned along with us as we trade on that first link in the description below. But for those of you just for the free view and the rides, there is upside potential in ADA. Where do we accept we're wrong? We accept we're wrong if we trade below 27.80. And recognize that could indeed happen. It's a smaller time frame, roughly a 4 hours, still good enough. 4 hours, I'm not uncomfortable with 4 hours. A little bit of a double bottom here as well going on. So for reversals, you might even have a shoulder in there and a W bottom. You might dip one more time for a final right shoulder. Then you'll have a W head with two little shoulders, and you're good to go and head through the 33.5 with potential to go beyond. So there you have ADA in that scenario. Just so that you know, and we throw this at you, ADA would be, in this instance, our personal preference, but something like MANA is not entirely different structure, but ADA is just slightly better for us, but it has a similar structure. So what tends to happen is you get one or two tokens that might have been pretty hard hit in the events, nasty sell-off. It could be bottomish, but there is either way risk. And when you look at it on this one, that did go higher, but some people could also say, well, you're hanging a bit heavy, maybe it'll be a low. So watch out. Stop losses, real chance that it could go either way. It's not high probability. It's not us on our big macro where we're extreme certainty, but there does feel like weakness to come in crypto for the dollar, and that should mean that there will be a bid under alternatives to the fiat king, and that usually serves Bitcoin and the alt market very well. But as I showed, Bitcoin looked a little less good than the total three without Bitcoin and Ethereum. So dominance could drop. So this is the part where the maxis get a little bit antsy when you see a little bit of the dominance drop on Bitcoin and less of the upside gain. So you've just had a good surge of Bitcoin dominance from there. We've shown you this orange box that's at that key level many times. I can put the eye back on. You've had another surge, and this points to another period potentially of consolidation. It could have a bit of a fall in it, could have a spill. It could be more flat and benign like this one as well, but there's not going to be easy Bitcoin gains to the same degree, I suggest. So at best, it holds its own and goes horizontally on kind of a ledge. It could flag, it could form a falling wedge. If we are slightly wrong, it could do a rising wedge, but at the moment it doesn't look like it's doing that. It's got a lower high here, and the next expectation for me, more likely a lower low. So those alts could do better. ADA is one of those that we've identified. We also gave you MANA. Another point that we've done, and let's show you this for the Litecoin fans, which is a Bitcoin proxy to some degree, and so is BCH. I know people want to get all emotive about the arguments about who's what, but they essentially are cleared by the SEC through their relationship to Bitcoin stroke similarities. So let's just leave it at that without getting all hung up. And we had a very good breakout with a very good triggering event on Litecoin. You can see it, and it came all the way down and kissed our funnel, and that's known as a second chance. A second chance. And we see 141 out of this as part of our targets certainly on Finex, not on every exchange. On Binance it might be 139.99, etc., etc. But we see the 140 range broadly. And actually, as this goes lower vol, support coming in for this. Now you might also know that Bitcoin Cash of the other forks also started to get a little bit of interest come back in it. So we can find BCH for you as well. So Bitcoin Cash. So Bitcoin Cash had a great pump. That was really, really good. As it got acknowledgement essentially for the fact that it was a Bitcoin proxy. If you go on the smaller time frames, there is something coming again here. Now many might think descending triangle, that could be bearish, but there also sometimes can be a bit of a low slung ascending break that could come. So these legs are a little bit more muted. The honest truth is crypto is not spectacular right now. And I'm going to show you how gold, the king of anti-fiat, is in a very similar space. Why do you need to care about gold if you're a crypto guy? Because the anti-fiat category. If we highlight gold and we give you a little bit of an inkling and you have an understanding, what we're seeing is gold's potentially going to go up a little bit against the dollar. If I look at that technically, let's just get it up a time frame. You can see it's been slipping slightly. The anti-fiat have been a bit neglected. It stopped slipping, and again, you have the possibility of this structure. It's holding up pretty well. Now, take a snapshot of that, because I'm now going to show you gold euro, and tell me if it feels the same. Well, it shouldn't. It feels a whole bunch worse, and it's a whole bunch softer. So gold is actually soft in that same way that crypto is soft. So the anti-fiats are not getting the full benefit. Gold pound actually is making pipi out the bottom there and slipping through a grind line. Normally do those in pink, and is actually looking fairly soft. And this is a little bit of what we've got on Bitcoin. It's not crypto strong. It's crypto weakish, actually, particularly Bitcoin, but the dollar worse so. So you may find your crypto in euro terms actually goes backwards. Your crypto in pound terms is flat. Your crypto in other XYZ currency goes down, but against dollar, it's held its own and it's inched up. The story being dollar weakness. That's why I put you through FX for the first 5 charts that I showed you. This is a dollar weakness trade. So, my friends, you may want to visit us later on the Market Sniper, where we look at other things that may benefit more than crypto or gold in the dollar weakness environment, which could indeed involve equities, equity markets, certain other aspects that could do well, like the energies, where you could make some alpha. Okay, so crypto to benefit from a weakening dollar in an otherwise unimpressive crypto and Bitcoin market. Bitcoin potentially to shed a little bit of dominance, or certainly to pause on any gains, whilst 1 or 2 alts might be handpicked for a little bit of upside, including those that fell really hard and hadn't quite done enough. So the second tier on the bounce back ability will potentially make a play for a bit of catch up. Okay, until next time, remember, you're free to book a call on the link below. 14 days, or is it 7? 14 days, money back guarantee. If you do no high pressure sales, join our community to maximize wealth in reset times. That's what we're about. And with that, I love you and leave you. Bye for now.